Hello guys, you're welcome to this video. In this particular video, we are going to be talking about the 200 EMA. Now, the 200 EMA is also a moving average, an exponential moving average, but a 200-day period exponential moving average. Okay, so basically, the 200 EMA helps in filtering out noise. Unlike the EMAs with smaller day periods like the 9, 10, 15, 20, and the rest, the 200 EMA is used by traders who mostly swing their trades, or perhaps day traders or swing traders are the ones that mostly use the 200 EMA because it considers the long-term growth. It considers long-term trading opportunities. So now in this video, we're going to start by setting up our 200 EMA. The period is going to be 200 EMA method exponential, and then this is it. So basically, as with all moving averages, when the price of the asset is trading above the 200 EMA, it indicates bullish trend. As we can see, right from this place all the way up, it has been a bullish trade all the way up. And just like I said, that this strategy is mostly used by swing traders. You can see that when the price of gold crossed above the 200 EMA, this bullish trend started from this point. This was on the 10th of September, and you can see it continued up till now. It is still in a bullish trend, and we can see that this is the 4th of October. This is 5th of October already. So it's been almost a month. And for traders who swing their trades, they would have been on this trade for about a month now, and the price of gold has been rising still. So this strategy is mostly used by swing traders because the 200 EMA considers long-term growth. So basically, when the price of the asset is trading above the EMA, it indicates a bullish signal, indicates a bullish momentum. You can see that the price of gold has been bouncing off the EMA, bounced off the EMA again, bounced off the EMA, bounced off the EMA. Now, on the other hand, when the price of the asset is trading below, let us look for a good example for that. When the price of the asset is trading below the EMA, it's an indication of a sell signal, right? When the price of the asset crosses below, as you can see at this point, it crossed below the EMA, and then it started trading below it. You can see it was bouncing off. The EMA was serving as a roof. It was serving as a roof. You can see that the price of the asset bounced off it, bounced off it, and bounced off it, showing that there is bearish pressure. And finally, when it finally broke out of the EMA, we can see that the price rallied up to this point. So if we had entered a sell position around here, we could have considered setting our stop loss above the nearest swing high, or we could have considered setting our stop loss not far away from the EMA. If you want your stop loss to be tight, you can set it not far away from the EMA because this EMA is the 200-day EMA. So if the price should break above it, most likely the price will rally significantly. It will go up to an extent. So you can even, if you want to have a tight stop loss, you can set it just some maybe about 100 pips as a swing trader, of course, perhaps about 100 pips above the EMA should do, and then your take profit can be at the next support level, perhaps somewhere around here can be a take profit, or you can just wait for price to break above the EMA, and that would have happened somewhere around here. So had it been we had entered the sell trade here and reading it up to this point, we would have caught about 480 pips. About 480 pips if we had waited for price to break above the EMA, we would have caught about 400 pips. That is a good win. Okay, but for the buy trade, had it been we had entered around here the price after the price broke above the EMA, somewhere around here, and we had waited until the price broke down. This would have been our exit signal when the price of the asset breaks down below the EMA, because at this point it is serving as a floor. It is serving as a floor. It is serving as a floor. So had it been we had waited for the price to break down, we would have been on this buy trade for almost a month, and then finally you can see from 3rd August up till 19th. This is 3rd July. 3rd July to 19th July. Okay, that should be about 2 weeks plus. That should be like over 2 weeks. We would have been on this trade for over 2 weeks, and we would have caught about 950 pips. Okay, that was a very good win. And then our stop loss could have been below the support, or below the swing low. Would have been a good place to set our stop loss. Remember that the 200 EMA acts as a floor. The 200 EMA acts as a floor when price is trading above it in a bullish trend, and on the other hand, the 200 EMA acts as a ceiling. It acts as a ceiling when price is trading below it in a bearish trend. So in a bearish trend, the 200 EMA acts as a dynamic resistance or a ceiling. You can see how price bounce off it in a sell trend, serving as a ceiling or as a dynamic resistance. After you enter your sell trade, you can set your stop loss right above the swing high, or perhaps about 100 pips away from the EMA, and then your take profit can be when you see a reverse signal or at the nearest support level. And then for a buy trade, we can enter and set stop loss below the nearest swing low, or perhaps about 100 pips from the EMA, and then when price breaks below it, wow, this move was really a long one. This was a really long buy move. Wow, this is great. Had it been we had entered around here, this was on the 19th of February, this buy move continued. You can see that price has been bouncing off the 200 EMA, which was serving as a floor or dynamic support from the what date was that again? From about 19th February. It was bouncing off, continued trending higher until it got here. It's 22nd of April. This was over 2 months. This was over 2 months. Over 2 months, the price of gold was trending consistently upwards. And if we had entered this buy trade and set our stop loss below the nearest swing low and waited for that signal to set our bearish crossover before selling, which happened around here, we would have caught over 1,000 pips. We would have caught over 1,000 pips. This was it seems like this is not really aligning. Let's see if we can be able to get the exact. Let me go to the higher time frame so we can get the exact number of pips that we would have caught from that trade, from that particular trade. Okay, I'm just going to use vertical lines to indicate the positions. Remember, because if I change the time frame, the EMA is going to display signals based on that time frame, so the positioning might not be exactly the same on a higher time frame, right? Okay, but by using those vertical lines to demarcate, we can see. So this was the level we would have entered in, and we would have exited somewhere around here. You see, in between these two lines that I had set on the 1 hour time frame. So depending on how long you want to hold your trades for, that is going to determine what time frame you want to trade on, because you can see that on the daily time frame, the last time that price traded below the 200 EMA was in 2023, and it didn't even stay for long. From here, about 27th September to 13th October, and then since then the gold price has been trending upwards since then up till now. So had it been you are using the daily time frame, using the 200 EMA on the daily time frame, and perhaps you entered a buy trade from here, you could have still been in that trade up till now for about a year, unless if you had at some point maybe closed the trade at a resistance level, or maybe you just got tired of holding it for that long. But the price of gold has been increasing up till now. So depending on the time frame that you want to trade on, depending on how long your tolerance for holding trades, that is going to determine what time frame you would use the 200 EMA on. Okay, so as for that particular trade, it would have given us somewhere around 3,700 pips. Yes, somewhere around, because this is like 37,000 points. So 38,000 points, let's just say 38,400 points. That should be giving us about 3,800 pips. That's big. That's massive. 3,800 pips. So basically, this is how the 200 EMA works. It helps you identify the direction of the trend. It helps you to know when to buy and when to sell. When price is trading above it, it's a buy indication. When price is trading below it, is a sell indication. Note that you can also use other indicators for additional confirmation, and you can also use trend lines. You can also use price action for additional confirmations. You can decide to use candlestick patterns. You can watch out for candlestick patterns as well to give you insights on when potential reversals or continuations are about to happen. So that will be all for now. Hope you found this video insightful. Kindly like, subscribe, and hit the notification bell for more trading insights. Cheers and happy trading.